Welcome to the Futurati podcast. Any member of the Futurati is somebody who believes in the power of the future. We know there's a better world ahead, and we indeed have the power to make it so. In our podcast, we talk to the best minds in the world about the most urgent problems facing mankind today, and we hope you learn as much from them as we do. I'm Thomas Fry, a professional futurist and keynote speaker.
And I'm Trent Fowler, a machine learning engineer and author. Thank you for joining us.
Good evening, everyone, and thank you for listening to the Futurati podcast, where we dive into how emerging technologies will impact the world and your bank account. In recent months, there's been a flurry of activity in the government related to crypto assets, how to regulate them, and what their implications for national security will be. Though it's common to endorse a simplistic narrative in which Bitcoin and the government are flatly opposed to each other, the truth is more nuanced. We've invited Matthew Pines to the Futurati podcast to talk to us about these issues. Matthew is a managing consultant at the Krebs Stamos Group, a cybersecurity and geopolitical risk advisory firm. He has over 10 years of experience helping the government and private sector firms address pressing security and resilience challenges. As a National Security Fellow at the Bitcoin Policy Institute, he applies rigorous analytical methodologies to help policymakers understand the implications of Bitcoin as an emerging technology for the benefit of the nation. He holds a master's degree in philosophy and public policy from the London School of Economics and Political Science and a bachelor's degree in physics and philosophy from Johns Hopkins University. If you enjoy this interview, please subscribe to the podcast and share it with your friends. And don't forget to check out our website, futuratipodcast.com.
Matt, thanks so much for coming on the show.
Thanks for having me.
Let's hear a little bit about your background, your interests, and what brought you to working on the problems that you're working on today.
Yes. So I got started in undergrad as a physics nerd. So I've been a physics nerd since I was interested in science as a young child. So I went to Johns Hopkins to study physics, thinking I was going to become a professional physicist. Picked up another major along the way in philosophy because I was always had like a side academic interest in sort of the philosophical aspects of physics and how do we interpret our sort of fundamental theories of physics. As I kind of got more into the academic track, I realized being a PhD academic wasn't my cup of tea. Right. So I took a pivot towards the end of my undergrad, knowing I wasn't going to go into a PhD program. I interned on the Hill with a physicist, actually, a member of Congress. And that was it, sort of a more foray into like the real policy world. And so I stalled for a bit over in London at the London School of Economics and did a master's there in philosophy and public policy at a really interesting kind of interdisciplinary program, and got to spend some fun time in London. But didn't quite set my career track there. Law school, who knows, came back to the States and got a job working for the National Science Foundation, sort of 2-year fellowship, supporting a cluster of programs, essentially helping them make grants across the entire field of economics, as well as a sort of a more interdisciplinary branch of funding that they reserved for decision risk in management sciences, and then the science of organization. So kind of a complex of disciplines related to game theory, decision theory, kind of the theory of the firm, organizational psychology, organizational dynamics, all very interesting, but again, not really a career path. I sort of stalled for a while there while I figured out what I wanted to do. And I bumped into a buddy of mine who was working for a startup management consulting firm, was doing some work for the government, essentially doing like wargaming, what are called exercises, right, in the parlance. And I thought, that sounds interesting. I'll give that a try. And so I joined this sort of small startup consulting firm where that was kind of their niche expertise as a junior analyst. And it basically built my career the past 10 years sort of in that world, sort of jumping from project to project. But essentially the common thread was trying to help the government understand what its risks are and how to understand and measure its preparedness for those risks sort of across the board, whether it's sort of natural hazards, the typical things, hurricanes, earthquakes, tornadoes, pandemics, all the way to, large scale kind of terrorist events, cyber attacks, all out nuclear war, right? So kind of all the bad things you can sort of imagine happening. Sort of my job for the past 10 years was trying to help sort of systematically think through and analyze those different scenarios, role play them at different levels of government, whether it's sort of around a table, quote unquote tabletop exercises, all the way up to include the cabinet and the president, and then doing full scale exercises. So we actually, bring hundreds or thousands of people across the country, and they actually simulate different sort of events and incidents over several days with a lot of logistics and evaluation. For the past few years, I also been managing a lot of different contracts, including one related to emerging technology and doing sort of operational experimentation with that. So that's been my professional interest. I have a side hobby related to Bitcoin, which is sort of thinking through Bitcoin from that lens, right? So what is the scenario-based planning analysis that you would do if you're sort of thinking through the larger geopolitical macro strategic implications of Bitcoin as an emerging event, right? As if it became sort of macroeconomically relevant over the next 5 or 10 years, what would that mean? And sort of play through, maybe the first or second order implications of that. So we're not strategically surprised, which is sort of the one thing the U.S. government does not want to be. So I've been sort of engaged in sort of the Bitcoin side of things from that kind of intellectual perspective, and been supporting this sort of new think tank that just got started called the Bitcoin Policy Institute a few months ago, to try to put out some more long form research and analysis to examine Bitcoin from like a serious sort of policy perspective. And so I've been sort of bringing that national security perspective to bear. A few colleagues have been bringing more like energy, environment, and sort of broader economic analysis. So that's also kind of been in my sort of side hobby wheelhouse over the past few months, in addition to my day job. So yeah, that kind of is the short the short version.
That's a pretty remarkably diverse background, and I can see why you've ended up being one of the leading voices in the national security implications of Bitcoin.
Well, I mean, it's hard to say leading because there's not too many of us. Right. So it's good to to sort of choose the pond you want to swim in, right? Be a nice big fish in the small sea. It's interesting. So I think that's changing a bit. I think Bitcoin, from national security's perspective, has been on the radar, but from a very narrow lens, right? It's sort of emerging originally, sort of dark web, drug money, and it was like within the remit of pretty like narrow groups within, say, the Department of Justice, the FBI, and maybe parts of the intelligence community from like a pretty narrow perspective. And it was, like how most people observed it, essentially this emerging digital money that was mostly kind of either halfway between a science project and some sort of criminal enterprise. And then it's matured dramatically. And I think some people's mental perceptions are still anchored in that original encounter, especially in the government, because in the government, those things don't change a whole lot. Like once you create a group whose job it is to do something, that group just keeps doing that thing until something dramatic changes. Right. And typically it doesn't happen. So there is that sort of cognitive preconception bias, just general inertia that you see in the government. I think that is what's changed a bit. And I think it's accelerating in the past year or so.
Yeah. When did you first find out about Bitcoin?
So I first found out about Bitcoin probably in like 2015, 2016. But like most people's first encounters, you sneer at it or you dismiss it. And then I had a close friend of mine who like got bitten by the Bitcoin bug and then went like all in on like crypto, right? And he like was, one of the like ICO people, was like all about, he like had a quasi hedge fund doing coin offer. It was like, and of course I saw that and I sort of looked in horror at that. Right. And I thought, this is going to blow up in your face. It's a total scam. What are you doing? Yeah, we had a long form arguments. I remember like over a cabin where I just was like tearing into Bitcoin, like, nonstop. And then after that, I sort of, again, like preconception bias, right? Like because I had made that argument so stridently, and then I had just sort of looked away. And then I came back to it in about 2019, actually. And I thought, okay, this thing hasn't gone away. In fact, it's probably become more mature. And so that's why I started reading more intently about it. And I had been like acquiring like bits along that way just to try to like force myself to learn. And then I sort of got derailed in February of 2020 with the pandemic. And I was like really focused on tracking this emerging virus in China. And, I'm as my career has sort of probably taught you, I'm like intensively, like acutely conscious of those things. And I had known from work that this was going to be a problem. Right. And so I was like very much like all in on tracking that and preparing and doing lots of stuff on that. So that derailed sort of my Bitcoin focus until about, say, the spring or summer, where I sort of stepped out and I saw what Michael Saylor did with MicroStrategy. And I thought, okay, we're in a completely different ballgame from like a global economic perspective. Like the scale of the response that I saw coming down the pike was going to have sort of dramatic consequences for the U.S. fiscal position and sort of the global economic system writ large. And that's when I just started doing the real deep dive into Bitcoin and starting to see that this is going to become sort of potentially geopolitically, macroeconomically relevant. And that's when for about a year and a half, that's when I've been sort of thinking more in public about those questions.
Well, let's stick with that theme because I want to follow up on some of the national security threads that you laid out earlier. You argued in a recent paper, Bitcoin supports U.S. national economic strength, that Bitcoin is a national security asset because it will help sustain our strength, counter our strategic adversaries, and promote our values. Why don't you just start at the top and walk us through that case?
Yes. So I anchored that paper, which was me trying to put down, in long form, some of these loosely confederated thoughts I've been bouncing around for a while. And I tried to think about a way to frame it really with the sort of DC blob, for lack of a better term, as my intended audience, right? The people who I work with, who I know sort of think about the world from a certain perspective, how to speak in their language about Bitcoin, right? Because sometimes that's kind of the key jump is like there's a lot of writing about Bitcoin that sometimes is speaking to itself inside its own echo chamber and takes a lot of like presuppositions for granted, almost as kind of dogmatic canon about what it means to believe in Bitcoin. And you need to kind of step out of that to be able to translate it to a completely different audience so they can appreciate, some of the more salient strategic features of it. And that's what I tried to do. And so I looked at President Biden's interim national security strategic guidance, which is a document that most administrations release some version of when they come into office, is like, this is how we view national security from like a really high level, like, strategic perspective. And I looked at that document and I was reading it, and it sort of jumped out at me that the key sort of pillars that they anchor that document on, like, to have a direct mapping to the way I saw sort of the argument about Bitcoin forming. And so I basically just almost use those wholesale, right? So that, national economic strength, counter-strategic adversary, spreading our values is essentially what's in that document, right? So I was like, just said, okay, well, these are the three things that President Biden says are the keys to U.S. national economic strength. Like, how can I tell a compelling story about how Bitcoin could support each of those three elements in a very straightforward way? So that's basically what I tried to do. And so the first was, economic strength, which, there's a few different aspects of, but essentially, as a maturing technology, there's a whole host of associated innovation, capital market, just basic appreciation, right? Like, you have Bitcoin companies going public and appreciating, the value of their equity. There's private equity firms. There's a whole host of job creation and development in sort of Bitcoin and Bitcoin-related companies and industries in the United States. So to the extent that we want to be a hub for technology innovation, for appreciation of our capital markets, pretty straightforward. But then there's just the idea of, well, Bitcoin as a monetary technology on this geopolitical stage. And that takes a little bit more to unpack, and it's like a longer form, more speculative argument. But the basic idea is Bitcoin is not a threat to the dollar by any means. Bitcoin, in a sense, is a substitute global reserve asset in a monetary system that's built on the treasury security as the foundation reserve asset for the world, which is putting a lot of weight on a debt security for a government that has a lot of debt and is vulnerable to shocks to that system. In fact, one of the primary concerns of the Federal Reserve and our monetary authorities writ large is the stability of the treasury market. So anything that you can find that can help shore up confidence and stability of that treasury market would be a good thing. And so the extent to which Bitcoin appreciates as a reserve asset that's predominantly held by Americans and by American companies relative to our adversaries who may be trying to move to a commodity-backed gold reserve system, then we would stand to gain disproportionately. So if Bitcoin were to monetize alongside or instead of gold relative to our adversaries, we would stand to gain disproportionately. So in that sense, this is more the longer term. Okay, how can we find alternative sources of economic support, both economic growth, technology growth, but also just sort of reserve assets that people want to hold that America holds more of, right? So if it goes up and we hold more of it than our adversaries, then we get wealthier in terms of the purchasing power of that asset over time. Now that's a little more speculative. It takes a lot more to unpack that one beyond the kind of the bottom line up front I just gave. The second, which dovetails a bit with that, is countering our strategic adversaries. Because in a sense, American power for the past, since World War II has been predicated on our dominance of the global monetary order, right? We were able to rewrite the rules of the global economic system coming out of World War II, the Bretton Woods arrangements, and then creating a whole host of these other institutions that's really cemented our power. And that structure, while it's gone through a number of modifications over the decades, has been sort of the core foundation of American political and geopolitical power, right? So the economic system, the monetary system that the world runs on, is what in a sense has driven America sort of hegemony over the course of those decades. Now that system has potentially been coming to its sort of self-determined end in the sense that the requirement to be a twin deficit nation, to provide the world with enough dollars to keep the dollar as a global reserve currency, has a dramatic consequence to our domestic industrial base. We have to outsource all of our manufacturing, which is done. We have to then turn our economy into basically a fire economy for the sort of finance sector, insurance, real estate, to be able to recycle those dollars from surplus countries around the world back into our economy. And that distorts sort of the basic economic system, and it overemphasizes the fire sector relative to, say, manufacturing. And that has a whole host of political consequences, right? You have rising polarization, you have rising inequality, you have sort of the urban coasts against sort of the deindustrialized heartland, which creates these political pathologies that we've witnessed recently. So there's a whole host of problems that being the world's reserve currency has generated for us that our adversaries are seeking to exploit. And so how do we think about the way the global economic system is going to evolve over the next 5, 10, 15 years? What are our adversaries trying to do that we can counter? And so the other key part of that is what are they trying to do, right? Because America doesn't stand in a vacuum. Importantly, China, which the Department of Defense, the host community, multiple administrations, it's been very consistent. One of the few bipartisan points of consensus that China is the strategic peer competitor for the next several decades. I mean, that they are the pacing threat that we use to design our military force structure, our basic strategic plans. And look at what China's trying to do with respect to sort of the monetary order is a few things. One, they're basically changing the relationship they have with the dollar system. They used to recycle the dollars they get from running a structural trade surplus with us away from, well, they used to recycle them into U.S. Treasury securities. That was basically the MO that we had engineered going back to the Saudis in the 70s and the Plaza Accord with Japan and Germany.
Right. And
we turbocharged it with China in 2001, which is basically taking surplus dollars because all trade is denominated in dollars and recycling into our debts, which is able basically to cement our power and allows us to finance our national expenditures sort of extremely efficiently. They fundamentally pivoted in 2013 for a whole host of reasons, but they made the strategic decision to basically stop net accumulating treasuries and instead take those surplus dollar reserves and recycle them in two ways. One, around the world through the Belt and Road Initiative, where they basically are acquiring strategic assets throughout the Eurasian periphery, in the Middle East, Africa, South America, and even the United States and our allied countries, to secure like ports, pipelines, plants, et cetera, as well as hard assets like land, and spread political influence and corruption. Now, on the back of that BRI dollar-based investment is coming their digital currency. So they have a technology suite, basically. I sort of call it the authoritarian as a service. So like Huawei 5G, sort of Hikvision, surveillance cameras, a whole host of sort of AI, machine learning-based software applications, and the digital currency, the sort of DCEP or the digital yuan. And basically they're offering this authoritarian as a service to authoritarian inclined developing countries and emerging markets, and basically saying, here's an alternative governance model and technology suite that we can basically install, help bring you into the 21st century, but in a controlled way that allows you to achieve the benefits of our quote unquote harmonious society that we have, but sort of brings them into the Chinese technology stack and the associated political, economic, and trade orbit. So that's a strategic challenge to the United States over the next several decades is where is the periphery going to go as the sort of the world becomes somewhat divided east and west. And importantly, the digital yuan is a main feature of China's strategic ambitions to achieve that. And so the last point is, where does Bitcoin play in? So what you see around the world is sort of crypto dollarization. So you're seeing the proliferation of stablecoins, dollar-pegged digital assets, some of more dubious stability than others, but it's sort of a free market for dollar money. And around the world, it's hard to get dollars. And you have to go through a banking system that sometimes you don't have access to, or the countries themselves suffered chronic dollar shortages. This is like a well-known macroeconomic problem called the euro dollar shortage. There's a scarcity of dollars in the global economic trade system, and these countries that don't have a whole lot of trade, have to sort of beg, borrow, and steal to get dollars. And so like the dollar is the coin of the realm if you're in Nigeria or if you're in Indonesia, et cetera. And here's essentially a free market internet-based dollar, sort of digital equivalent that you can hold on your phone that if you have a sufficiently circular market of people who are willing to accept that, it sort of starts to take on some of the properties of a dollar, not all the properties of a dollar that you maybe have in your domestic banking system, but like for some people is good enough. And there's a sort of flywheel that happens between Bitcoin's appreciation over the past 2-3 years and crypto dollarization, these sort of dollar-based stable coins. As you think about it, okay, like you're taking, if you're thinking about like what does Nigeria do, right? Nigerian government central leadership is pretty close to China. They have a digital currency that is sort of compatible and interoperable with the Chinese digital yuan. And so there's a sort of political elite project to essentially align Nigeria structurally with China and sort of, link the sort of digital currency systems together. But at the population level, this sort of organic adoption of Bitcoin and dollar-based stablecoins. And so you're seeing this sort of different trends, right, coming into potential conflict. And essentially, dollar-based stablecoins and Bitcoin are essentially fighting the fight against that creeping authoritarian sort of digital dystopia that China's trying to export to emerging markets. And it's sort of fighting it on its own. So you think about it from and this is sort of the pivot to the last point, with like American values, right? Sort of how do we sustain American values? How does Bitcoin sustain American values? Well, I mean, there's a domestic argument that Bitcoin essentially embodies, private property, freedom of expression, the ability to engage peer-to-peer, right? Sort of the foundation of, the American political sort of ethos that, we have, these inalienable rights, and that we sort of respect private property. We respect commitment to freedom of expression within limits, of course, but that there is, an essential default mode towards sort of liberty, right? Sort of small L kind of liberal values. And so domestically, you see that in a lot of areas where people can get access into forms of transaction payments that they might be blocked out of because they're, sex workers, or they have a criminal record and it makes it very difficult to get a bank account, or they've been redlined in the past, so they can't get bank accounts. Right. They're victims of domestic abuse, and so their spouse watches their bank accounts and they can't transact privately. So there's a whole host of sort of, values domestically that Bitcoin can help instantiate. And then overseas, it's the same idea that like a lot of countries around the world don't have the benefits of being in a quote unquote stable currency regime that most people in the West are used to, even though we have recent inflation. And so for those people, they have no options, right? They can't get access to, like international equity markets. They can't get access to the U.S. Treasury market. They can't get access to even like dollars sometimes, right, to put under their mattress, right? So like, how do those people hold anything that they can say is theirs and can actually own it? They're very rare for people around the world to actually own anything. And this is a bare instrument that they can own, and you don't have to have much more than just a phone. And sort of the mobile development has really sort of jump-started a lot of the sort of internet sort of based economies throughout the developing world. So as you see that mature, and it's really just in early days, you could see sort of the proliferation of these technologies, sort of monetary technologies, but they're really essentially technologies that really empower individuals relative to potentially oppressive and unstable governments.
Well, I think we can wrap up. I have no further questions. No, I did want to follow up on something you said about the dollar, that the spread of Bitcoin doesn't threaten dollar hegemony. And I just wonder if the Federal Reserve chairman or the powers that be in Washington would necessarily see it that way. Because it sure seems like, number one, America has, I don't know if benefited is quite the right word, given that it's structurally distorted our economy, but that we have enjoyed a position of power as a result of being the default reserve currency of the entire world. And then obviously central bankers or people in Washington can fund public spending through the inflation of the money supply, and that gets them out of all sorts of trouble that they would get into if the population at large who's actually paying for these things really felt that pinch. So how are you going to make the case to them? Because I don't know that they would see it that way.
Yeah, I think it depends on where we think the end state is, right? And I think over what time horizon, and then what the risks are given different end states and different time horizons. So for at least my planning horizon, like the 5-10 year horizon, which I think is at this point in time, like that's about as far as you can even like try to reason. Beyond that, you're basically just throwing a dartboard and you're telling a story. I don't know anyone can predict or even try to forecast much beyond that. Besides sketching broad trends. And so when I think about that relative time horizon, 5-10 years, what I think is really the core period at which we're going to see these strategic shifts come into play, and where we need to think outside the box from a sort of a geopolitical macroeconomic perspective and look at all the tools that we have at our disposal to bolster our the sources of national power and wield those instruments against, serious challengers, right? And so, okay, that's the premise. Like, we're going to confront a period of geostrategic, rivalry, monetary, challenge, fiscal challenge, constraint, potential increasing geopolitical disorder, if not war or outright conflict. Okay, like, you have to navigate those next 5-10 years. What challenges are you going to face in terms of your legacy environment, right? And I think you need to think about the current structure of the global economic system. When you think about the dollar system, has sort of two core elements, and this is key to distinguish between the status of the U.S. dollar as the global reserve currency and the status of the Treasury security as the global reserve asset. Because those are very different sort of features of the dollar system that play very different roles, and they're not, inevitably linked together. In fact, the dollar has been the global reserve currency much longer than U.S. Treasury security has been the global reserve asset. It's in fact been like the key to sustaining American dominance over the 20th century has been sort of finding relatively smooth ways to substitute a different asset at the foundation of the global monetary system while keeping the dollar as the global reserve currency, right? Because essentially currency is just a medium of exchange for the most part, right? You use it as a medium of payment. It's also a unit of account. It's just a common language that people use to price things. It's just a symbol in a certain bank account. But it's not people you actually hold your savings in. It's not the asset that you hold. You have some dollars in a bank account, which is just a ledger entry for your day-to-day liquidity needs, including as a sovereign, your day-to-day, week-to-week sort of balance the trade account. What you hold your savings in is a reserve asset, and that's historically the sort of pre-dollar version that was gold. And then it became the Treasury security in 1971, essentially, when we shifted to kind of what we could call the petrodollar, it's really the eurodollar system, where the premise of the global economic order is America secures global trade with the power of our Navy, the power of our military. We basically allow globalization to happen after World War II, and the condition was basically you don't fight anymore, you don't invade each other. And we will secure the peace. And you basically have to play by our rules fundamentally, right? And the world split into two blocks. There was the Soviet bloc and the Eastern bloc, and we fought in the periphery in the emerging markets. And the way we sort of won that war, that economic war, was by finding new ways to sort of engineer our assets at the foundation of the global economic system. And so we were able to ride out of the World War II victory with gold at the foundation because everyone had to give us their gold, otherwise the Nazi would take it. And so because we had everyone's gold and everyone trusted our economy because everyone else's economy was destroyed, everyone pegged their currencies to the dollar, and the dollar was pegged to gold. And that worked for about 20 years, started to break down in the 60s as we started to do things like the Great Society programs, and then the Korean and then the Vietnam War, which started to run trade deficits. And countries like France were worried that they wouldn't be able to, get their gold claims paid back at par. And, there was a whole host of maneuvers in the late 60s to try to rejigger the system, right? And this is this basic story, we look back into history, you think about where we're going to now, is that these monetary systems that look like they've been around forever, like they last very short periods of time historically, right? They're talking 20, 30, 40 years
right.
before they sort of engender internal pathologies that force some sort of reset. And that's just like where we are now. I won't go the whole story, but like that we're hitting that sort of moment. And the question is, where are we going to find the next juice, right, to squeeze out of this system? And so the basic idea here is that Bitcoin's about $1 trillion, a little bit less now. But think in 10 years, right? If it were to be equivalent to gold, it would involve like a 10x. Well, Bitcoin has done 10x's several times in the past few years. So it's not like an impossible proposition.
Right. But
imagine if it say there's like a 1% chance that it were to monetize to the level of gold, say this decade. Well, that would be a dramatic event of macroeconomic consequence, right? If that were just to happen, without your planning, right, you would be surprised by that. And now you have this reserve asset that's held by, however that process plays out, by a lot of people around the world, as if it were like their gold reserves. And if you are not planning for that possibility or trying to, make that work in your favor, then you're going to be left on the side. And I think the key idea here is that, the treasury market is really, it's not well suited to be the global reserve asset. The dollar is extremely well suited to be the global reserve currency because it's got network effects.
Yep.
It's got, high liquidity. People trust it. People trade it, et cetera. It's the treasury market that is the problem. And the government's recognized this. They've written papers after March 2020 where the treasury market froze, right? Like there was literally like no bids for treasury securities in March 2020, which was like the crisis moment that forced, $1 trillion of QE per week by the Fed. Because that was like the, 5-alarm fire going off. Like, yeah, stock market crashing. Yeah, that's a problem for Goldman Sachs. But like if the treasury market doesn't get a bid, Uncle Sam has a big problem.
Right.
And so it's like that happening like is a signal that that system is not stable. And yet that's the foundation for the whole global system. And that happened in the context of the pandemic, panic. But if it happened then, it can happen again. And our adversaries saw it happen and saw what our response, what that forced in terms of our response. And so you can guarantee that the Chinese have built that into their plans. If they did like a Taiwan invasion, like how they could, they think in terms of multispectral, like war, right? It's not just invasion, it's cyber, it's economic activities, et cetera. So if that's the foundation of the global economic system, and we saw how fragile it is, and we saw how much duct tape and baling wire it took over the past 2 years to just keep it together, I don't know. Like, I don't want to just peg the fortunes of our of our national security on that system without thinking about how we could find an alternative to support it and buttress it, right? So if essentially we allow Bitcoin to monetize equivalent to gold over the next 5 or 10 years, and it's held by mostly Americans, that essentially restores our national balance sheet to a certain extent and reinstills confidence in the treasury security that right now people around the world are sort of losing trust in potentially, especially at the sovereign level. So
there's an interesting tie in here. So a while back we interviewed Eric Yakes. Are you familiar with Eric? He was on what?
Yeah,
Bitcoin
the Seventh Property.
Yes, he wrote the Seventh Property. Excellent interview. And he wrote an article recently for Bitcoin Magazine called Wither Bitcoin, where he made the case that there are cracks forming in the edifice of dollar hegemony. And he points to declining dollar reserves in various central banks across the world and a variety of other metrics. And his basic thesis was once these cracks begin to form, it doesn't guarantee that Bitcoin will become the sovereign reserve currency on the other side of that, but you have pockets in the network effects, which otherwise are this almost impregnable shield. It's nearly impossible to overcome something that's just already saturating the world economy. But if in response to inflation, in response to freezing the foreign held reserves of the Russian central banks, various sovereigns become less sanguine about the prospects of holding U.S. debt as a reserve asset, then that means those network effects are less operative, and Bitcoin has a gap which, in theory, it could move through. It sounds kind of like you would go maybe 60% of the way there, but you would not you wouldn't endorse the idea that this means Bitcoin's going to replace the dollar. Instead, you would point to historical examples of Uncle Sam being very creative in maintaining a dollar-based reserve system, which is undergirded by different assets. It's able to swap them in and out. So maybe it could just swap in Bitcoin, maintain the dollar hegemony, and we just kind of like keep on trucking. Do I have that basically right?
Yeah, yes, I think over that sort of time horizon that I'm thinking, I mean, you could sort of jump ahead to several decades out and make a whole host of other add a whole host of other auxiliary assumptions and be a little more speculative to get to where Bitcoin is a like world reserve currency. But that to me is going a few steps ahead, and I think we would need to see like a lot of other things happen before you'd be able to like ascribe certain credence to that scenario. I mean, the biggest thing is it has to become less volatile. Like fundamentally, volatility is a function of uncertainty. At its core, right? So if the level of certainty and sort of meta uncertainty around Bitcoin's future price were to sort of self-stabilize, which is how some, most monetary regimes get created in the first place. But usually there's like a state who forces that certainty, right? So whether that can sort of market emerge is a test. Like we didn't see gold monetized, 5,000 years ago. So we don't really know if that's possible. There's like theoretical arguments to make that, yes, it could converge to become a medium of exchange and a unit of account and achieve sufficient global adoption that it can serve that role. It's got the technical features and the endogenous capabilities to do it. Whether it will actually do it, hard to claim. And finally, so I think a lot of these arguments, when I say about countries will, we live in a finite planet with lots of specific geographies, with lots of different political cultures, and a distribution of resources and political systems that like will heavily constrain how that would happen, right? And we don't live in like this sort of a neutral blank slate where like country A and country B are just, anonymous flags making these economic choices in some sort of abstract, model. Like they have very different interests and historical legacies and constraints. And so like you look at the world system right now, it's fundamentally divided and has like big structural poles in it that are going to be the dominant forces dividing up, who's got the power to write the rules. Like the monetary system, the monetary order, it's moving downstream of a geopolitical order, right? Like the reason the dollar is a global reserve currency is because we won World War II and everyone was destroyed. And we were able to sort of, rewrite the rules and then sort of implant and then get those network effects and then use them, our collective military force to reinforce that over time. So you would need to have like a structural change to the balance of power in the world system to see the dollar like fundamentally shift, right? You could go back to like the 20s, and what you saw in sort of the 20s is sort of the pound was the global reserve currency. They had taken it from the Dutch a few centuries earlier, and it was essentially the dominant maritime empire, right? And sort of great oceanic imperial powers was sort of the world system, baton being handed off from the 1600s, and usually conquering into the inland, which was somewhat separated from that, nascent sort of mercantile imperialist system. And so the pound was like the more recent version of that, where like everyone wanted the pound and hold the pound. Well, they ran into some problems in World War I. That sort of put some chinks in the armor and allowed the U.S., like the Lend-Lease Act, essentially, start to encumber them with respect to this rising power and status quo imperial power. But, they weren't like totally knocked off. And the world essentially was more in like a mixed reserve system. The pound was really strong. Dollar was getting there. And really it was where the center of trade finance was. So London was the dominant center of trade finance. Yeah. And so trade finance drove sort of the monetary order. And so London bills and like the London houses, that was the foundation that was the heart of the global economic system. And there was this sort of frenemy, still Anglophone alignments. They didn't fight wars, but it was a tension between New York and London. It took World War II to really knock London off. And then New York was able to basically, come out on top, and the dollar reigned supreme. Now we see a system where China and the U.S., like China does not have the amount, and I don't believe this, I don't think China wants to or can supplant the dollar. And so it's more a matter of, there isn't necessarily going to be like it's not like an either or. There is a global reserve. This is China. It's either the yuan or the dollar. It's just, you have usually just a declining dominance and just a more diversification of how people approach their reserve asset holdings. And for me, like the key decision like balancing agents in that system are going to be the Eurasian periphery and the Middle East. So like what OPEC and India do is basically going to shift the balance, because if you're OPEC, right, these surplus countries. The reason why we sent, the Treasury Secretary to Jeddah in 1973, Secretary Simon, to meet with the king, was to engineer the petrodollar system, which was, okay, we're off gold. Like we basically need to like link the dollar to like something, and it was effectively oil. But oil was really just like the pass through to get those dollars into the Treasury market, and that was the idea. Is like, okay, now the Treasury security, full faith and credit, is the foundational asset that everyone who's like selling anything, including nations that are, oil exporters, have to hold. And the deal we made with the Saudis is we would protect them and, give them, and they'd have to buy our weapons, right? So that's the key, looking ahead to the next 5-10 years, it's like, you have to see the geopolitical order, how that might unfold to really back into what the monetary order might change to.
There's a lot of talk going on about Russia in response to all the sanctions that have been levied on them, of unleashing a gold-backed digital ruble. And I was wondering what your thoughts were on how that would play out. And I understand the kind of the devil's in the details of this, and people will try to pick it apart once it comes out. But does this actually cause a ripple in the global economic scene or not?
So I've seen good analysis that, lays out a hypothetical scenario where Russia could leverage its large gold position to essentially try to destabilize Western commodity like specifically gold markets, and essentially cause a dramatic revaluation of the price of gold. I don't see necessarily that happening in a digital gold. I think it's mostly buzzwordy stuff. I mean, I don't see much people taking it. I think Russia is somewhat in a bad position right now. I don't see they have, they have a sort of key ace in the hole, which is their commodities, but it's like a negative weapon, right? It allows them to sort of cause pain, but it's gonna be hard for them to sort of engineer a new system. For that, they really need China. So they really need to, basically, they're effectively, Putin is now under the wing of Xi, effectively. If you think about like how the global system is going to evolve over the next 5-10 years, and where that might lead to people taking different attempts at rewriting a monetary structure, Europe is really going to march to the tune of us, right? Like they're going to now be relying on liquid natural gas supplies from us for the next several years, if not indefinitely.
Right.
So they're tucked under our wing, and Russia being economically sanctioned and isolated and extremely economically sort of destabilized is going to be very beholden to China. So think about it like Ukraine is really a proxy war essentially between this great power confrontation between the U.S. and China to a certain extent, where Putin kind of got the green light from Xi. And so what China really wants to do is really what they'll allow or let Putin try to do with any sort of new currency regime. And there's been talk about Eurasia, like a Eurasian trade bloc, and trying to expand that Eurasian trade bloc and then use that tight web of trade relationships and political relationships to launch. It's like a new currency, whether it's like a Eurasian euro, essentially, that would be pegged to commodities because that's their economic sort of asset, right? I'm not sure how that's going to work. I think China is trying to use the yuan with like limited convertibility for surplus nations specifically. Because if you think about it, like what the exorbitant privilege that America has that benefits certain sectors of the economy over others is that we can print dollars and get real assets, right? The consequence of that is that the people taking those dollars on the other side of the transaction then use those to buy up our assets. So we get consumer goods, but they get our equities in real estate. So China likes the current system. It's like working for them, right? Like They now own lots of our companies. They can spread that money around throughout the rest of the world and buy things up. But they know that like it's like a means to an end. It's not like an indefinite system for them. And so China and Russia together have this no limit strategic partnership that they announced just before the Olympics, and then just at the end of the Olympics, just before he launched the invasion. And there's potential cracks in that foundation, but fundamentally, Eurasia as a landmass is like the economic heartland, right, of the world system, right? Like those commodities and resources is what the Western sort of maritime powers. You can like think about like the old sort of dialectic between Great Oceania and sort of Eurasia, right? And sort of the competition between those basic elements of the geographic system. I think Putin has like a big digital gold like card up his sleeve. I think they're looking for incremental changes, and I think China is looking to see how they can take advantage of this. And the key balancers are going to be what the Saudis do and what like India does, and the Saudis and the rest of OPEC. Essentially, the key idea there is it's about the stock and a flow decision. Like the flow decision is when like Glencore, which is a big like commodity trading company, wants to like buy a cargo, an oil shipment from Saudi Aramco. They borrow dollars from say JP Morgan. JP Morgan debits them those dollars. JP Morgan then says, or Glencore then says, give those dollars to Saudi Aramco. I get the oil. The oil goes to whoever they sold the oil to. Saudi Aramco takes those dollars, gives them to the Saudi Monetary Authority. Saudi Monetary Authority then shows up at a treasury auction and gives those dollars back to the Treasury Department for U.S. debt. And the U.S. debt that they buy actually just remains in custody. It's just a ledger entry that says that like you own this Treasury security. It's maintained on the books of the Fed. And so the Saudis were like happy to play that system for 50 years. But now, MBS is a millennial sociopath, and he's kind of has some antagonisms to the West, who he feels doesn't respect him. Jake Sullivan, that security advisor, went over there and got a stern talking to. And then they announced, of course, that they're going to maybe denominate some of their sales in yuan. I think that was mostly just like a petulant kind of middle finger to the West for a start. But like that shows you like the chinks in that system is it's formally these autocratic power structures that we put in place and sustained over decades that now may want to hedge their bets because maybe they don't trust that like a future administration could come in and say, actually, we're going to penalize you, MBS, for saying something bad or being a bad guy. We're not going to let you, like those treasury securities aren't yours anymore, right? And so there's an incentive for those people to be like, all right, well, yes, the U.S. capital account is open to me. Like that's the premise of being in global reserve currencies. You have to allow an open capital account. The free flow of capital in and out is like what you have to allow, which means a lot of Russian and Chinese money and Saudi money and Qatari money comes into our system. Right. Which has all these pathological effects and corruption and buying up our assets. But if you're one of those countries, you're like, all right, the U.S. capital account is open to me now, but if I get on their bad side in the future, it could be closed to me like this. And they look at China and they go, well, yes, China's got a closed capital account and a managed currency and internal debt problems, and they're not exactly super strong, but they'll make me a special favor, right? Because like we're part of the autocratic club. And so while it's nominally closed to me, it could be open to me in the future. And so, which is again, it's all about shiftings on the margins. It's not like a binary flip of the global order. Like all of a sudden it's just, going from like a certain level of unquestioned dominance and the system is stable for all time to the system is not so stable. You hedge, you look for alternatives, you diversify. And if you're one of those autocratic, oil exporters, you're going to start to hedge your bets. And that's, I think, the key idea is where do they hedge their bets? And they don't have a whole lot of good options, which is why the dollar is going to remain still very strong, right? It's like the dollar is very strong because people need it to service the massive amount of debts that they have. And so they're kind of trapped into owning dollars. They have to get these dollars. Like that's the pathology that drives, like the dollar index to 103 is whenever there's any stress in the system, people's debts, start to become hard to service. The demand to get dollars to service those debts goes up, and that creates like a feedback loop where people need more dollars, and that exports, basically more inflation to those countries. It makes it more difficult for them to service those debts. And we essentially that's a system we engineered for a reason, right? Like it was a weapon that we wielded to essentially crush people that weren't playing by our rules. And to the extent that people have the wherewithal to sort of tell the U.S. to get lost, that's what we're going to try to do. And that's where energy, it comes down to resources and energy, right? Like if you've got the goods, you can write the rules. If you've got the commodities that, you as an industrial civilization need, well, you've got leverage, right? And I think those countries are going to use that leverage. Whether they diversify, I think the way this is going to settle out is it's going to be a sort of all above. They're going to have enough liquidity in enough different currencies like dollars, euros, and the yuan and the pound and the yen to service their liquidity to manage sort of a multipolar trade blocks. But they're going to essentially sweep their non-liquidity needs in terms of reserve assets into harder assets. That might be like real estate or equity in countries who are like they're friends with. It might be gold in a vault somewhere, and it might be Bitcoin, right? As sort of money that's not a liability of someone else, that's not politically contingent, that can't be sort of flipped off or on, if you get crosswise with a different political administration. So I think that's the new dynamic. We don't know exactly where that equilibrium is going to be, and a lot of like hard power can be brought to bear to change that equilibrium, to enforce a certain equilibrium. The question is, like, what precipitates, a certain use of force to sort of, coups have been made of lesser things. And so this is where people have these confident predictions that these things are just going to happen in a vacuum, like the market will just decide. It's like, well, we don't live in that world, right? We live in a world with bombs and spies and assassins. And it's like when the chips are down, things happen. Right?
Yeah,
So I noticed that you haven't mentioned anything about any of the other altcoins, whether it's Polkadot or Terra or Solana ApeCoin or whatever it might be.
Terra's been doing interesting stuff.
Yeah, and so are you basically writing them off, or do you consider yourself kind of a Bitcoin maximalist?
Yeah, I would say I am. I treat them as like fundamentally different things, and so worthy of very different aspects of my attention, right? In the sense that like Bitcoin, I view as like the sole geopolitically sort of macroeconomically relevant asset over any sort of relevant time horizon. So if I'm thinking from that perspective, like if there's anything from the crypto world that's going to have any role to play whatsoever in these unfolding geopolitical and monetary dynamics, it's Bitcoin. So if I'm looking at that question, Bitcoin's the only thing to me that's like relevant to that question. There's like other questions that are still interesting to ask, like what does crypto writ large mean for the future of different types of sort of monetary related technologies and other platform, Web3 ecosystems. And I have, say, a higher level of skepticism associated with those. Not to say that it's all going to go away. I think these things have a tendency to stick around. I just haven't yet seen a compelling, like, long-term use case that has demonstrated viability to me, right? I see a lot of like casino, right, chips, and people like going to the casino. People like gambling. People like doing these things. I haven't seen much like true innovation come out. I'm still cautiously optimistic, but I need to see more than what I've seen thus far. I mean, I think there's a lot of innovation potentially, right? But like everything else, like in venture capital world, right, there's like 99 terrible ideas that get a lot of money that can last for a long time as long as the money's flowing, and then nothing happens. They disappear. And maybe there's gonna be that 1 in 100 that actually find a product market fit, that actually have a self-sustaining economic model, that actually deliver some value to their users, that isn't just like a Ponzi leverage yield farming token scheme. Right. So I'm yet to be convinced, but I'm not going to write it off 100%. But it's interesting. There's a cultural dynamic here that I think I'm also when you mentioned Bitcoin maximalism, it's hard for me to know like whether I would describe the label that to myself, because I don't know like what sort of social valence that has in different contexts. But essentially for me, it comes down to like a view of like the rights of the user in that system. So in Bitcoin, fundamentally, the rights you have as a Bitcoin user are fundamentally a different type of right than you have in a different token system, where you're essentially a second-class citizen, right? Like there's founders, there's the sort of cloistered developers that run the foundation that are essentially have veto power to a certain extent, can tweet out that we're pausing the blockchain, like stand by,
right?
Like so you're investing in those things like you invest in like an equity, right? Like, and that's not to say that like equity is not a bad thing. Like equity is great, right? Like those companies could be doing good things, but like you shouldn't pretend that like when I buy like a share of Microsoft, like I'm not on the board of Microsoft, right? Like I don't pretend that I have some like equivalent right to run Microsoft or make decisions about Microsoft just because I own a share of Microsoft. Whereas with Bitcoin, like I think I do have that right? Like being a Bitcoin holder, like there's no distinction to be made between any person who runs a node, right? Other than the economic power of that node. And so the idea of like rough consensus development, the sort of sociological phenomenon that is Bitcoin as a network of individuals, right? Because it's this program, it's this open source software, but it's fundamentally a social phenomenon, right? It's people adopting it and then bringing in different social and political attitudes to that. So when I look at like the question of Bitcoin maximalism, which generates a lot of heat, sometimes not a lot of light, it's the idea that in a social movement, you have to have kind of this like dogmatic vanguard, right? That is like the hardcore like sect at the core of it, right? That like will be like the keepers of the flame, right? And that sets up in any social dynamic, you have to have like a semi-permeable membrane, right? If that membrane is not permeable enough, it dies out because it doesn't let new people in, right? And then those bubbles, they go to a certain size, and if they harden their shell, no new entrants can come in, and it dies. If it's too open, if you don't actually have any sort of guiding ethos or sort of commitment to sort of a core canon of beliefs, then it's like a cell that goes through whatever apoptosis, and it just disintegrates the membrane, and it ceases to be a unique entity.
That brings up a good point here. I was hearing that everybody knows that 21 million is the maximum number of bitcoins that can be mined, and we're at about 19.5 million right now. And that the number that I saw is that roughly 6 million bitcoins have been lost. They're buried in landfills. They're inside of somebody's mattress that got burned or hauled away, and so Bitcoin is evaporating, kind of like water from a pond, in some respects. How does that play out? I mean, there's no way of recovering these lost assets that are. I mean, this is truly a remarkable amount of money that's just gone into the ether, which is a bad term to use. Yeah,
I think there's a quote from Satoshi, or maybe it was Hal. I can't remember Hal Finney, one of the original, kind of Bitcoin talk folks, where it's like every lost Bitcoin is essentially a donation to the network, right? Because it's effectively if it's truly lost, if it's unspendable, UTXO. Then that value, is just essentially absorbed by the rest of the network, right? Like, because like you think about Bitcoin, it's like a deep philosophical question, like what is Bitcoin, right? What is it? And that brings up the question of what is money. So when you think about like there's like a hard cap limit, the number 21 million was arbitrary, but what is essential is that number does like not change, right? And so it's irrelevant how many Bitcoin actually get lost, as long as you still have like some amount of Bitcoin, right, to be able to subdivide it to conduct transactions. Because it's not like that is like it's not like a dollar where like there was a certain number of dollar-based purchasing power, you burn 10% of the dollars, like those other 90% of the dollars become worth more. Like it's because it's a fixed cap, like that just sort of it's like a compressionless fluid, right? It's like if you compress the container and you lost some, like the pressure in the container stays constant. And so, yeah, there's no like effect at all for the network if people lose their Bitcoin. It just, sucks to be them. But yeah, like macroeconomically it has no impact. Now, unless it was like a massive custodian, right? So like if tomorrow, right, we found out that like, the Grayscale Bitcoin Trust had, for whatever reason, like just screwed up their custody. And now like, I don't know, half a million Bitcoin just been like erased. Oof. Well, like everyone else is it'd be great for everyone who holds Bitcoin, because now like, the price would go up by that proportional amount that was lost effectively, because that's the total amount that can ever be spent. But that is I don't see that as a risk. But there is a deep rabbit hole to go into about what do we mean when we say like Bitcoin is a very unique type of transaction system. It's not like an account-based model where like right now we have a ledger system of money where I have an account at Bank of America, you have an account at JP Morgan Chase, essentially just two books, like ledger entries, right? Liabilities and assets to say, you own this, and then I have a liability that matches that on the other side. When I make a transaction between A and B and they have different banks, right? They just like adjust each other's books proportionally. They just say, all right, I'm debiting this and crediting over here, which is rewriting a ledger entry. It's just saying over here, this person has less in their account, this person now has more. They settle that through FedWire, through the Federal Reserve. So everything gets cleared through the Fed. And they use reserves, which are bank money, to essentially adjudicate those balances. Bitcoin is a very fundamentally different type of model. It's similar in the sense that it's ledger-based money, right? In the sense that like it's a ledger of transaction history. But when you spend a Bitcoin, you're like sending the whole UTXO, and then you're splitting out and sending back a transaction. It's like unspent transaction output. So you're basically saying, I'm sending this transaction, and then I'm basically pre-coding in like payment back to me, yep, which is the delta of what the payment was for. And so then I get a new UTXO that is like, that's that amount. So it's like a fluid, essentially. It's like these are just bare quantities being transposed, and then the transaction of those bare quantities is then being codified on the ledger. It's like a story communally. It's like the best analogy I heard. There's an essay called I think "What is Bitcoin" by a philosopher named Craig Warmke, and he like analogizes as a fictional substance. almost like butterbeer in Harry Potter, where it's like, if you imagine like, everyone agrees like what Harry Potter is, like the book Harry Potter, there's no like forgeries. Like you can have your own fan fiction and you can have lots of different things happen to butterbeer, but that's not butterbeer. Butterbeer is what people agree is butterbeer in Harry Potter. And so if there was like, a group agreement on how to basically adjust everyone's own personal copy of that Harry Potter book to, like double the amount of butterbeer that Harry Potter drinks in a certain scene or subtract it. And everyone now had this distributed consensus mechanism to change that quantity. And there was basically an enforcement mechanism that was distributed to ensure that they all agreed on exactly how much butterbeer went up or down in everyone's copy of the book. That's basically Bitcoin, right? It's like, and now that you have that, you can do things with that. Now you know that when you transact, that record is going to be maintained and stored, and now you can have confidence to use it as a means of value.
Yeah, let me ask from a little bit different angle. If the 6 million have been lost, if there's no method of recovery for a lost Bitcoin, isn't it reasonable to assume that over the next 1,000 years, every single Bitcoin will be lost, and that there's none left? There's no mechanism for bringing anything back.
Yes, I mean, this is where you go into the far future, right? Like civilization is still stuck on this planet in 1,000 years, and we're still having to use money like Bitcoin. I don't know. I have not much confidence in our future civilization. Like we need to make it through this century. But maybe we'll need some help with the aliens. We'll see. That's a separate topic. But yes, I mean, fundamentally though, like because like a Bitcoin, like the smallest unit in the protocol is a Satoshi, which is 100 millionth of a Bitcoin. So if the purchasing power of a Satoshi became equivalent to like $1 today, then like one Bitcoin would be the equivalent of $100 million worth of purchasing power. And so maybe you only need like a few 10,000 of Bitcoin to remain like, in usable transactional service. If the value of a Bitcoin is so large relative to the purchasing power of that economy, and you can denominate it, you have the subdenominated units of a Satoshi, then you're good, right? In fact, even a Satoshi can be denominated through the Lightning Network into millisatoshi. So you have like a thousandth of a Satoshi. So yeah, if you got to a situation where like the world economy was like in the quadrillions of dollars or tens of quadrillions of dollars, and that was like all Bitcoin, and like 90% of all Bitcoin was lost, you could do the math and figure out, okay, like how much like a millisatoshi would like equate to, and is that a sufficiently small enough unit to be usable as a unit of account? And even if it wasn't, if it was like, say, too large, like it was, like $500 worth, right? Like people would just invent like another credit system for the smaller transactions, right? Like which we've done throughout human history. Like you have rhinestones in the village that are like, this is the generational reserve asset, but no one transitions with those reserve stones. You use this other ledger system that's like a community agreement of just like putting notches, and then like the local chief says, okay, yes, that's a transfer of wealth. So like, again, not like, I don't see it as a big problem, right? Like, cause I think even if you got to like there's 5 Bitcoin left, but the purchasing power of those Bitcoins were so large, if it was a constraint and you're just basically adding a different denomination at the bottom, it's not a very, it's a question, like the whole same question with gold, right? If we like 1,000 years, we find like we were able to like mine, like asteroids, and now we have like a quadrillion dollars worth of gold now that we can dump into our economic system. Well, that's a big problem, right? But like people still value gold at whatever $1,800 an ounce today, right? Knowing that like in 50 years, maybe we can harvest asteroids, but that hasn't been priced in.
Right. The market isn't that efficient.
Yeah.
Well, excellent. It feels like we've talked about every single thing in the entire world. Is there anything you want to leave our audience with?
Yeah, we really jumped around. I would say, I'd say my final thought is, so I'm thinking about things. I think to step out, right? Like my meta approach. I think people, because you get into any specific question and there's nuance, there's complexity, but like for me, fundamentally, it's like you need to reason over timescales and set your boundaries of like what you're actually trying to assess, and then like know that you're not going to be able to reason too far ahead to the future without like the cone of uncertainty like exploding like parabolically. And I think different initial conditions, like where you start that process, like make that explosion happen much faster. And like that's where we are now. Like February 24th, when Russia invaded Ukraine, like opened up the aperture for potential scenarios like very quickly and very widely.
Yep.
And I think just everyone's looking for the answer. Like, how is this going to shake out? Like, who's going to win? Is China going to win? Is Russia going to win? Is the U.S. going to win? It's like everyone has a strong opinion. And I sometimes, it's like, all right, well, this is the way it could work out. But like, really, nobody knows. And like, there's a lot of downside risks, but there's a lot of, like ambiguity in between. I think people have a lot of sometimes people need to adjust their credences down across the full set of potential scenarios, and then try to think about where just making it through this period of the next 5 or 10 years, and then maybe technology can bootstrap us on the other side. But for now, we got to just muddle through. But yeah, that's kind of I don't know, that's not quite depressing or optimistic. Yeah. It's more just being being intellectually humble, but also prepared for lots of tail risks or tail events that maybe are now closer to the center of the probability distribution.
That's about how I would expect an analyst to close the show. So thanks very much, Matt. It's been a real pleasure.
Yeah, this is great.
Thanks for having me.
Much appreciated.